Intel's stock has been on a pretty incredible run lately, and it's telling the story of a great American comeback. But this isn't really a story about technology. It's a story about price. More specifically, it's about the massive gap between the price of survival and the price the market is now paying for what looks like guaranteed success.
Okay, so to really get what's happening, you have to start right here with these two very different prices. On one side, you've got the price the U.S. government effectively paid in that crucial August 2025 deal, $20 a share. And on the other side, well, that's the price public investors have been paying. Understanding this gap is the key to the entire Intel story right now. One price is for survival, the other is for a flawless victory.
And this really frames the central question we have to ask ourselves. The debate has completely shifted. It's no longer about whether Intel is going to make it. That's pretty much been secured. The real question, the one that matters now, is whether the current stock price has just gotten way ahead of itself, pricing in a perfect turnaround before any of it has actually happened.
So what is this story that has investors so excited? Let's take a look at the narrative that's been fueling this whole rally.
The bull case, you have to admit, it's pretty compelling. It's built on 5 key pillars. First, this idea that Intel will reclaim its process technology crown with its next-gen nodes, 18A and 14A. Second, it's obviously a prime beneficiary of the CHIPS Act. Third, there's the ambitious plan to build a massive US-based foundry business. Fourth, these really clever smart capital deals with partners like Apollo and Brookfield to help fund the whole thing without wrecking the balance sheet. And finally, all of this positions Intel to be a key player in the AI revolution. It's a powerful story, for sure.
But a great story isn't the same as great financials. So now let's pivot away from that narrative and take a hard look at the numbers. For the full fiscal year 2024, Intel posted an operating loss of nearly $12 billion. Now, this is the core profitability of the business before interest and taxes, and it is deeply in the red. And when you move down to the bottom line, the net loss that's actually attributable to shareholders was even worse, almost $19 billion. I mean, that's a staggering figure that just stands in stark contrast to a stock price that's been rallying. And a big piece of those losses came from a massive write-down on its Intel 7 manufacturing assets. Now, this isn't just some accounting entry. It's basically an admission that the previous generation of technology really struggled with demand and execution. On top of all that, there was another $2.8 billion in restructuring charges, mostly tied to headcount reductions. These are not the signs of a healthy, thriving operation. These are signs of a company in the middle of a really painful and expensive overhaul.
Which brings us to the core puzzle, right? If the financial reality is billions in losses, huge write-downs, and major restructuring, what on earth was the market celebrating? Why did the stock rally so hard?
Well, the answer isn't in the income statement. It's in a strategic agreement with the U.S. government that just fundamentally changed the company's entire risk profile. So let's deconstruct the deal that put a floor under Intel's valuation.
Okay, so back in August 2025, this landmark agreement was struck. The government accelerated nearly $6 billion in CHIPS Act funding. In exchange, Intel issued hundreds of millions of shares in warrants, and it was all based on a price of $20 a share. This was a massive capital injection and a huge vote of confidence from, well, the most powerful backer you could possibly imagine.
So here's the crucial point. The stock didn't rally because the business suddenly got profitable. No way. It rallied because this government deal took the worst-case scenario. I'm talking total collapse, completely off the table. The market wasn't rewarding operational success. It was re-rating the stock for survival. And that brings us to today. The price has moved way, way beyond that $20 survival level. So now we need to analyze what the current valuation is assuming about the future. What has to go right for today's price to actually be justified? Now that survival is basically secured, the focus has to shift to execution. So if we're going to track this turnaround, what are the metrics that matter most? What do we need to watch as this story tries to become a reality?
Here are the 4 big things to watch. First, the Intel 14A node. The company itself has said that without a major external customer, this node might not even be economical. Second, those smart capital deals, will they require Intel to meet its commitments? If construction timelines slip or wafer demand isn't there, the company could face some serious financial penalties. Third, foundry profitability. Can Intel actually turn these deep operating losses into a real profit? And finally, you got to look at the capital structure. That government deal came with significant share dilution that's going to impact per-share earnings for years to come.
Everything really hinges on these next-generation technologies. Intel 18A and 14A are the bedrock of the entire comeback story. They're designed to leapfrog the competition, but delivering them at scale with good yields and winning major customers, that is a monumental task that is far, far from guaranteed.
And this brings us to the verdict. Look, this isn't a story of failure, but it's not a story of guaranteed success either. It's a story of a company that is somewhere in between. The turnaround is definitely underway, but it is not yet proven.
So what does the path forward look like? Well, on the upside, another move up in the stock could be justified by, say, a major customer win for 14A, a real recovery in profit margins, or the Foundry actually turning a profit. And the red flags? Any delays to the 18A ramp, a failure to land that key 14A anchor customer, and of course, a continuation of the massive cash burn we've been seeing in the financials.
You know, this is really the most disciplined way to think about Intel today. The government backstop means the company is no longer broken. But the hard work of executing this multi-year, multi-billion-dollar transformation, that is far from over. Success is a possibility, but it is absolutely not a certainty. And the key question for any investor has to be, at today's price, how much of that success are you already paying for?